Jones here at Markets.com, and today is Friday, ladies and gentlemen. Look, this is a quick video preview for the webinar, which is going to happen in a few moments, so do not tune out. We're going to speak, we're going to talk, we're going to discuss everything what's related to the markets, and to be honest, finally we're seeing this kind of, the market again coming to its senses, and but look, I'll talk about all that in the show. Hopefully you'll enjoy it. Please feel free to ask any questions if you wish, because that's the whole point of the show. I mean, that's why we're running it live. And yeah, we'll go from there. Ladies and gentlemen, I'll see you in a bit. All right, ladies and gentlemen, hello. There we go. Finally managed to organize my OBS here. Look, ladies and gentlemen, welcome to this Friday session. Today is the 14th, if I'm not mistaken, 14th of November. Yes, Friday. We are basically midweek. Mid-month. Look, almost. I think the weekend will be the mid-month, but anyway. Look, ladies and gentlemen, welcome everybody. I wanted to pick up on a few important topics today. So yes, we'll look into the markets. We'll see what's happening. The market is on a shakeout moment, which is fine, to be honest. Look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to put my usual good morning in the chat room. Good morning, everyone. So yeah, also I want to mention that we have our website, right? You can always check it out. You can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Right. I think my brain is really trying to put everything in shelves right now, and because it's a bit of a chaos, and not chaos actually, it's this excitement, not chaos. There we go. Excitement in my brain right now. With everything what's happening. And I really want to share it with you. So, just a sec. There we go. You need to cool down a little bit. I think that this will help me out. Look, the markets, right? I also before we go any further, I'm happy that I'm on this website because I want to mention the webinar that I'm going to be having on the 26th of November, ladies and gentlemen. So do register. If you go into learn and then into webinar section, you will be able to register here for this webinar. Basically, it's going to be on the Fibonacci's, and this is the fourth episode in the series that I do right now on the most popular top indicators, where we basically take we take one popular indicator, we kind of totally squeeze it, get the best out of it, and apply it in real live market action on our demo account, just to see if it actually is worth using it or not. So like I said, feel free to join. It's there. The link will be in the description. Actually, you know what? I think it's not right now, but okay. When the webinar is going to be finished, the link will be in the description of this webinar. But again, you can always, like I said, go on our website and go into Learn section and then into webinars here. Anyway, look, ladies and gentlemen, the markets. The markets are interesting. So yesterday we had a nice little decline, I would say. The tech stocks were getting hit, and look, of course, the big explanation right now, which you're seeing in the news, is surrounding the fact that the market is worried about the Federal Reserve interest rate cuts, right, next month in December, that maybe that's not going to happen, because looking at this table here, it's almost 50-50. And this is what I was saying in the beginning of this month, and after the kind of the meeting we had at the end of October as well, when I did my shows, and I talked about it in my MarketsTalk webinars. Basically, the Fed, the Jerome Powell came out of that meeting sounding all, very not very much in favor of the interest rate cut going into December. Well, to be honest, it's understandable. With all this government shutdown, which caused so many problems with the data, and that's what I have the name of the webinar of today's webinar. Can we trust that BLS data? I think the letter L is unnecessary in that abbreviation. But look, what can I say? The problem is there. The problem is with the data. Now we're getting these reports that we might not even get the October CPI and NFP numbers. This is what I was talking about as well this week. So again, the problem, like I said, this is the big problem, and everything is right now circulating. And for the Fed, let's say, not to go for a cut because of this, I think this is quite reasonable, unless they're going to say that, oh my God, the job market is suffering and that's why we need to save it, and the lower interest rates are for sure going to help this case, this cause. It's questionable. It's really questionable. I mean, because we don't know what's happening with inflation. With official figures, we don't know, but in general, we do know. Real people who go into the supermarkets, they do understand. They do understand what's happening with the prices. And since the tariffs have been implemented, a lot of kind of increases were consumed by the retailers and all those sellers. So now, because the retailers do understand it cannot go further that much, they will unleash the kind of the wave of these tariff aftermath, this tariff effect onto the consumer. And I think that this is what the market kind of finally comes to a realization, and that's why in my intro I was saying, finally, because the market, we were shouting about this like a month ago, 2 months ago, and when tariffs were starting, to implement. And what I was saying in the beginning as well, that for the consumer, it normally takes around like a year to realize that there is a problem. So when the problem starts, roughly around a year. That's kind of, or nowadays maybe even it can drag for half a year, because, we're getting more sophisticated, although I doubt that. But anyway, because we keep on repeating the same mistakes over and over. So look, long story short, for now, like I said, it's the problem is that with the data, the Federal Reserve, and are we going to get the interest rate cuts? But what's more interesting? That I'm going to jump into the charts, straight away, because look, we have some data here, right, coming out today. We had some China numbers from China, retail sales, better than the forecast, but still worse than the previous. Foreign direct investment year to date, no number here. Really? Let me refresh. Really? No number. Okay. So look, today we were supposed to be getting PPIs. Again, I don't know if we're going to get those or not, but anyway, I doubt that. But look, I'll just jump into the chart straight away. So Nikkei rallied yesterday, actually, yes, yesterday it rallied. Today it was selling off. Why? Look, the stock market, as I showed you here, the stock market has been declining yesterday, and for good. And in general, I kept on saying that I think that investors will soon come to a realization that that all this AI spending, all this capex as the the popular word right now, with the hashtag. All this capital expenditure that the companies are doing, what they're doing is they're just lending out to each other. You're actually creating this kind of false economy, false image for an economy. And I said it before, and I'll say it again, that the government shutdown was very convenient for these major corporations to make all these deals that we saw in October. In October, honestly, if you were asleep, then I'm sorry, but you shouldn't have been asleep, because honestly, the amount of deals that everybody was making, all your Nvidias and where's that? Nvidia was the big player here. In general, I think Nvidia, it's not gonna be the the favorite in at least near term, because again, everybody comes to this realization that, look, everybody's sharing this money. There's like 10 corporations that are circulating all these funds between them. I'm sorry, but this smells a little bit like money laundering. But okay, we cannot call that. We call it investment, right? This when you're oh, we're making a deal with OpenAI. OpenAI is very conveniently sitting not public. It's a private company. So imagine this: all these major corporations, all these giants who are publicly traded companies, they are investing into a non-public company, a private company, and then everybody's kind of suddenly investing into OpenAI, and then OpenAI kind of does all this kind of money transfer through Oracle, because Oracle is in the game. And let me just have a look at Oracle. I mean, yeah, there we go. Initially, was the big jump when in the beginning of September, we saw these announcements, that Oracle is going to be working together with OpenAI, and like everybody's going to be, and now you see the stock. Why is the stock dropping? I mean, come on, like, since it's yesterday's problem. No, yesterday the stock market did, but it started dropping earlier when the stock market actually was on a rise. So what the problem is here? Isn't that such a good deal that they are doing with all these data centers? Of course it is, right? If you cannot sense the sarcasm in my voice, then I don't know. Look, for me, like I said, I have been saying this, and I'm not the only analyst who has been saying this, and I think that there is a problem, and I think that now everybody's coming to this realization. So look, these big companies, AMD, Nvidia, Palantir is not in the club, but actually is going to get hit as well. Meta, now this one is also, look at this. I mean, falling off the cliff here. I mean, look, the Meta is a different story. They kind of got caught in a way. And I think that this was also one of the triggers, that Meta got caught, that, I think that justify your spending, like, why are you spending this? And in a way, yes. I mean, and of course, the earnings did not really help here. When the earnings came out, they saw that, there's a big problem with the spending here on AI, and AI is kind of causing this issue of your earnings, decreasing. So, look, long story short, I think the money has been reshuffled. I think we are done, or they are done with the reshuffling. I think now the next stage is, look, what's interesting is that now all these big tech giants, by the way, how's Google doing? Google is still holding on because, again, Google might be a little bit more diversified, not as much as exposed in AI. It is exposed into AI, but let's say not as crazy. Like, for example, Amazon is something to watch here. These guys are, more exposed. But Google, yeah, this one here is, if you look at the stock here, it's kind of in a range right now, so it's not really falling off the cliff like others. Would I say it's a good investment or something right now? No. Look, I mean, if all these tech giants are going to start falling, I mean, they're already falling. Maybe we're missing. But Google also could follow suit. Look, one thing for sure. what's interesting right now, if you remember, when the government shutdown started, everybody was kind of, oh, what about the economic data? Forget about the data. Look at all the deals that all these major tech giants are doing with AI. Oh my God. And that became the headline, right? Now the headline is like data, economic data. Oh my God, like the economic data is this, we're that. We're waiting for the schedule from the BLS, and blah, blah, blah. But but there in the background, there are now they're questioning the whole AI thing. They're questioning all this expenditure that was done, where all these big giants tapped into private equity as well. So, and this is the problem, and it's kind of, you're trying to overshadow that big problem with the there. It's the all the data, economic data is also a problem, but let's say it would have less effect than this one. So that's what I'm saying. So this is where, this is how the market works, and they want to build your opinion. They want to kind of form your opinion, and so that you would know what to think about, right? Anyway, long story short, for now, what we're looking at here. So we're looking at these big giants, tech giants. Okay, they're dropping. What else? I cannot say anything else apart from very good. Palantir, it's a different player a little bit. In general, the Palantir issue is it's a military company. I cannot call it any other way, because it profits from conflict. So what's interesting now, how they're shifting, I think, their position. I think that Palantir is now trying to get more into Europe, because the Russia-Ukraine conflict has no end to it, because the conflict, the genocide in Gaza has kind of slowed down a little bit. So maybe not as much spending goes now into military, and especially this military intelligence is not much needed in for of Palantirs, what they can offer. So that's why they kind of maybe it's fading out a little bit. However, we understand that the Russia-Ukraine conflict is not gonna it doesn't have an end yet, and most likely it's not gonna end. It's a long game. So now you're shifting more to Europe. So we'll see how it plays out. Of course, we'll see how it goes further. But certainly, it's a company to watch. I'm not saying that you need to invest into it. No, it's again, in my opinion, it's a moral company. But hey. You know better. Sometimes I would say this. Money doesn't smell, right? So yeah, look, coming back to the indices here, Nikkei, look, we dropped nicely, and I talked about this idea, and I talked about the scenario here that if we do drop below this hurdle, below this 50,594, then yes, the next target could be this 20-day SMA. But look, my preference for the downside, as I said before, the drop below the 20-day SMA. If we do fall below that, then great, more sellers could join in. So if we are looking at some higher levels, then certainly a push above the 51,413 zone. This is something that we are monitoring carefully. So long story short, for now, like I said, I'm leaning a little bit more towards the downside, of course, because again, market is coming to its senses. And the way this structure looks, actually, let's not forget about the structure as well, here. So we had a peak here, an all-time high, then we drift lower, then we retrace back up, did a little retracement, held here a little bit around like 50% or something retracement, and now we're pushing lower. So in a way, we created a lower high. And now we are, let's see if we can go for a lower low. Let's see what's going to happen there. Shanghai Composite very quickly, of course, drifting lower. That's understandable. Together with, hand in hand with the rest with other indices. And yeah, the 4,000 psychological 4,000 zone, we have been oscillating around it. But my little issue here is that if I zoom in here a little bit and I jump into maybe a 4-hour chart or maybe 1-hour chart, now what you'll see is a possible broadening triangle pattern here. So something like this is not exact. Don't get me wrong. It's just, you know, something that I'm trying to make sense of. So in a way, there is a chance for this one to drifting a little bit lower here, testing maybe this area somewhere around maybe the 3,970, and then maybe drifting back to the upside. So long story short, for now, in a way, there is a chance for this one actually to push back up. So China is somehow still leading the way in a way. Yes, it's correcting together with the rest of the world, but not as severely, I would say. You know, so yeah, let's see. Let's continue monitoring this one. Like I said, this is an interesting one. Let's jump into the Dow Jones Industrial Average. On Wednesday, we create an all-time high. On Thursday, we sell the hell off. Honestly, look at the weekly candle. We're still in profit, but we're still in positive territory. But I don't know. Honestly, it's gonna be an interesting moment here. I want to just quickly check something here. So yeah, I'm gonna just check my other sources here a little bit. But anyway, what I'm saying here, look, I talked about it and I said to you, look, whenever we go for all-time highs, right? Yes, it's nice. Look, this worked out in general. So I said that if we do break this 48,040, then yeah, I'll go higher. We did go higher. We broke it, and we then retraced, which is fine, which is logical, because again, you cannot really, who's going to buy it at the peak? Who will buy the peak? Only the consumer. Like us, right? Like us. I am the consumer. I'm also, you know, sometimes misled by statements from different analysts who are, you know, speaking on official public TV, where, you know, with the popular TV, where, you know, everybody's kind of, oh, we should we should buy now, like, you know, it's time to buy, right? I mean, the stocks are all-time highs. It's time to buy. Are you for real? So even, let's say, I was watching Jim Cramer lately, and this morning, and lately, this morning, and even the guy who's like very bullish suddenly became bearish. Hey, you know, it's something, for everybody to understand. And another thing, what's interesting, actually, what I found out yesterday was basically this. I took a screenshot. Let me just show you what I'm talking about. So, what was interesting? You remember I was talking about Michael Burry, the guy who, the Big Short guy, basically, who predicted the crash of the 2008, and he was the one who was sounding all these alarm bells. Look, last week he came out saying he's going short on all these Nvidias and Palantirs, and he's basically bearish on the stock and bearish on this whole AI thing. And there we go. This week we're getting the sell off, because everybody was, of course, last week was like, oh my God, like, how can you do that? And what are you saying? So this was his statement. What came out here. I don't know, like, if I can zoom in here, I took a screenshot. So. With heavy heart, I will liquidate the funds and return capital, but for a small audit tax by the year end. My estimation of value in securities is not now, and has not been for some time. In sync with the markets. With heartfelt thanks, but also with apologies, I wish you well in your blah blah blah. So you can get in touch with that blah blah. My problem is that the guy kind of got it right, and it seems like he became a liability. He became a liability for everybody, because he kind of got it right. Yes, he made some bad decisions in the past as well. He made some bad predictions, which is fine. We all do, And this is the thing. But the fact that he actually made some big announcements when the big crashes happen. Now he comes out with this, and a week later he suddenly releases this letter. I'm sorry, you want it or not, you have to think that he might have been pressured, and it could not be just like a coincidence or something. For me, again, maybe I'm wrong. Maybe actually he did, he was just fed up. But when you're calling out the big boys where there's a lot of money and you're saying that it's all kind of a hoax, and you do have a big following, kind of public, a lot of people are following you, and a lot of people are actually, you're like a kind of superstar in the investment world. And now you're seeing this, now we were seeing this he's resigning, he's just leaving the markets totally. I'm sorry, there is something bigger than that. Again, maybe I'm reading between the lines, maybe again, but I'm not wrong to ask the question, because nowadays when you don't have freedom of speech, that's where, like I said, that's where the issue arises, because nowadays you don't have, you have to say what you kind of, only the smaller players with smaller followings can say something, that they want to say. But if you're a bigger organization or a bigger player in the world, and you have to comply with, you're given the text, you cannot be, let's say, anti establishment in a way. So you have to say what has to be, like, what's written for you. And like I said, that's why he came out with this, and now suddenly we're seeing this. We're suddenly seeing this kind of problem, where he's closing the his place where he, again, I don't know, maybe he wanted to retire early, I don't know, we'll see. But in general, does it look suspicious? Of course it does. So anyway, yeah, so we'll see how that plays out, of course. But certainly there are way too many questions that in my head right now, than but in general, so far so good. Everything is kind of going into its shelves. Like, look, Warren Buffett is stepping down. He doesn't want to deal. I think the guy doesn't want to. Full respect to him, honestly. Like, he doesn't want to deal with the big next financial crash, in my opinion, whenever it's going to be. And he's leaving in the peak. The guy's smart. You leave at the peak, and he's doing that, and he's sitting on a lot of cash right now. He's buying a lot of treasuries, and come on. So yeah, the world is an interesting place, very, very interesting place. And right now we're seeing that in the stock market. So look, am I from everything what I'm saying? Please don't suddenly think that I'm suddenly encouraging everybody to sell or something, become very bearish, or no. What I'm encouraging everybody is to kind of not to follow the herd in a way. I know, follow the trend. The trend is your friend. I get it. It is, you have to unfortunately, you have to balance. That's the beauty, of this game, of this market, these markets. You have to balance. It cannot be. You can sometimes follow. Yeah, you can get successful when you're just following, copying but in general, I don't know. Maybe it's nice to have your own opinion. Maybe it's nice to have your own head on your shoulders. Just saying. So yeah, long story short, for now, looking at the S&P 500, yes, it looks bearish to me. It does, from at least in the short term, because we broke back below this downside line. So we can now draw this downside line. Again, the previous one was this one was a tentative. That one is a tentative. Actually, this one's less tentative because we have 3 touches. This one has 2 touches now. But in general, I will keep it, because I think this could be part of a bigger picture now. And what is this text doing here? Come on. So what I wanted to take here, I wanted to take this arrow and basically say this way, that if we do break this downside line now, the flatter, this flatter downside line, tentative one, then I'll go higher. But for the downside, now I'm leaning towards the downside, but let's not get way too bearish. For now, I'm aiming lower, but I have to accept that maybe this is part of a triangle pattern. So maybe we're getting into a bit of a squeeze here. Maybe we're going to be forming this triangle, and then we're going to decide where we want to break out to. So maybe, like I said, maybe we can break out lower, maybe we can break out higher. But while we remain inside the pattern, I think that we could just bounce around from side to side here. So long story short, I would say this way: if you're looking for some lower levels, wait for a break of this upside line, the lower side of the potential triangle. If you're looking for some upside, wait for a break of the this downside line, and then we'll go from there. Nasdaq, very quickly, of course, tech. Look at this, beautiful. I'm a little bit more bearish in Nasdaq, to be honest, because it's heavily in tech. It's the best performer, and it's the worst performer at the same time. So it can be best performer, it can be the worst performer, which is logical, and the most speculative in a way. So yeah, look, we're dropping back below the 25,183 zone, where we dropped below the psychological 25,000 zone in general. Looking at the Nasdaq right now, 24,850. So 24,850, we're near this 50-day EMA. Actually bang on. Look at this, looking good. So it's a good area of support, to be honest. Now let's see if we can actually rebound back up from here. Just a little bit, just maybe a little bit of a bounce back up, or will it be a straight, knife to the downside? I would say just be a little bit more on the cautious side. So yeah, ladies and gentlemen, like I said, yes, be a little bit more careful. It's interesting, but at the same time could be a little bit problematic. So like I said, we are now on the cash index. On the cash index, I can see that we're resting on the 50-day EMA. So if we continue, maybe we can get a little rebound here, back up. I'm not saying back all the way towards that 25,183, although it could be nice. But just maybe a little bit of a rebound could be fine here, and then maybe a further decline. Look, in general, I'm aiming for that 24,000 zone. Currently, it's near my 100-day EMA on my daily chart here, but certainly it's an interesting area to watch. The German index DAX. The German index DAX, and yes, we are seeing a nice move here, a nice smooth move to the downside, breaking below this downside line here, and we're currently resting on the 100-day EMA. But to be honest, certainly there is a good chance of this one drifting back up. Of course, we're not far, because again, if the 100-day EMA provides support, we can see a little bit of a rebound. However, let's not rush into conclusions. For now, let's just kind of, like I said, in general, I'm bearish. As long as we stay below this downside line, I'm bearish. But am I considering a little bit of a rebound here? Yes. Maybe a move back up here towards this downside line. Let's see. And then, yeah, we'll just take it from there. I think this is a good line, so let's keep an eye on it. UK, so the FTSE 100, look at this. It was performing. It was one of the best performers. Now look at this. Boom. Boom to the downside. Look at this, breaking below this 9,787. I talked about it. And yesterday we were still here and around this 9,900 zone, and look at how far we have traveled. 200 points, boom, straight away. Look, we're currently seeing a hold up, yes, near this area, near the 20-day SMA. So maybe a little bit of a rebound could be possible. However, I'm not going to be in a rush. To be honest, I'm going to allow it to settle down a little bit. I'm going to allow it to kind of, for the tides to calm down a little bit, and then we can do something about it. Maybe this actually could open the door to some further declines here. Maybe, we could go back to the 50, the 100. This is what I'm going to aim for. Initially, I'm going to aim for the 50-day EMA, shown as the green line here, because we had a good touch here in the past. It was a good area of support. But then if that gets cleared, certainly it opens the door to the 100 zone right there, and then we'll take it from there. Let's have a look at what's happening with DXY. Now, DXY yesterday broke. I had an upside line here, something around this. I had this upside line. Again, it's not the best picture perfect line, but nevertheless, yeah, we got a break of it. But again, it's very tentative. Don't get me wrong. I mean, honestly, it's very tentative, and we are we're now, like we're seeing this breakout. But for me, look, trend line, no trend line, I think, I hope, I mean, for me, what I'm looking at here, I said that if we do fall below the 20-day SMA within the Bollinger Band and we stay below it, I'm going to lean a little bit more towards the downside. And there we go. I think DXY right now is pushing lower, and if we do continue to trade somehow below that 20-day SMA, I'm leaning a little bit more to the downside. However, I have to say that I'm going to be cautiously bearish, because I would like to see this 100 and the 50-day EMAs being cleared. Now, another thing that I want to say, because look, I mean, maybe this is part of actually a little correction before another possible leg of buying. So let's get rid of this upside line. I think it's a little bit in the way. So look, hear me out. DXY, dollar index here, in general, the US dollar could become interesting for later. If the stock market right now starts selling off, maybe people will say, hey, we need a safe haven, right? The yen and the US dollar. So maybe people will start seeing the US dollar as a good thing here, and they will jump in. Looking at the technical picture, well, looking at my EMAs, the 50 and the 100, and following the logic of crossings and all that stuff. So when this idea of this strategy, when you see crossings of AMAs, and then you act accordingly. Well, the 50-day EMA is approaching the 100 from above. Hey, if it somehow crosses above the 100, the 50, I'm talking about the 50, then maybe, just maybe, we could see a change in the trend. Hey, who knows? So this is, like I said, this could be quite interesting. I'm not gonna, like I said, I'm not gonna say anything yet, but certainly could be an interesting option here for later to consider. So if we do fall below all the EMAs here on my daily chart, okay, that's fine, don't worry. I mean, I'm gonna shift my attention to some lower levels, but there could be a chance of having something like that. Let's jump into the commodity. Actually, you know what? Currencies. No, let's jump into currencies, because look, yesterday I did an update on currencies, and I did a video on here, a quick Forex update. There we go. You can check it out. Basically, I spoke about the most top currency pairs out there. But look, what I said about AUDUSD. Now, what's interesting here, that yes, DXY is selling off, or was selling off. Now, and we saw AUDUSD rising accordingly. Yes, that's all fine. But what we're seeing right now is like a big shift back down. So what I said, look, we need to be very careful here. If DXY is eventually going to pick up buying interest, just because of the safe haven status, then we could see some interesting action in the market. And the AUDUSD, of course, could start falling off the cliff. In general, if the stock market does go lower, AUDUSD should potentially go lower as well. First of all, USD could become this safe haven, and everybody would be jumping into that one. Second, AUD is a risk currency, and well, it's a risk currency, and it could be just suffering one of the first ones to suffer. Long story short, could be an option, but I would say it this way: while we remain in between these two trend lines, basically while we're coiling up, I'm not touching it. AUDNZD, one of my favorite ones. There we go. Look at this. I mean, honestly, this is just spectacular. This is just spectacular. Look at this. Look at this move. Boom to the downside, ladies and gentlemen. This worked out like a charm. I said, we pierced through the 1.1590, but if we do stay below it, I'm leaning towards the downside. There we go. We're drifting lower. Now we're near key area of support. By the way, just to show you what that level is, this is the highest point of September of 2022. So if we do clear that one, I'm gonna go further south. Honestly, I'm really gonna go further south. I think I have to put my arrow here this way, and I think that this is, yes, it makes sense. Let's jump into AUDJPY. Now this one's interesting. You see, yesterday we got a correction lower. Yes, Japanese yen picked up interest, and we fell back below this 100.95 zone. Look at this. The weekly chart says it all. We had a few attempts for a couple of few weeks ago to kind of clear to clear this territory. We did clear it, but we always failed to stay above it. Now, what I'm going to do now is basically I'm going to keep an eye on this hurdle, because this is becoming quite important. And if we do continue to trade below the 100.95, then yes, I'm going to consider a little bit of a move to the downside. And well, I'm going to watch the stock market accordingly. EURUSD very quickly pushing higher. Now this one, yes, we did. It did push higher. It did break the downside line, and in a way, yes, everything's pointing more towards the upside. But given that we're going through extraordinary times, I would say, do not rush into conclusions. Okay, for now, yes, everything looks bullish. I would say this way. Yes, for now, everything looks bullish. But if somehow magically DXY picks up interest, honestly, I believe that we could see, I think we could see some nice strong reversals, back down here. Very quickly on EUROGBPJPY. Okay, now keep on watching this one, because look, we hit some highs here. I was talking about the 180. Honestly, look at this, ladies and gentlemen. This morning, we came to test the 180. I talked about it on Wednesday, and there we go. Boom. We almost just fractionally hit the 100. We're just missing 18 points. 18. 1 pip we're missing, or okay, rounded up 2 pips. We're missing to reach that 180. Amazing. And now the question is, can we see a reversal back down here? Because again, if the stock market does correct lower, everybody will be jumping into the JPY, and the euro might suffer against the JPY here. Let's jump into actually EUROGBP. Interesting, very, very interesting developments here. Okay. I don't like this pair, but it shot up here and now quickly drifting back down. So there is it seems like could be a problem with the euro. Let's jump into GBPUSD actually. GBPUSD. Okay, this one I'm still somewhat bearish. Look, if the euro has broken the downside line, the GBPUSD pair is still trading below it. So in a way, there is a chance for this pair to drift lower. And look, there are problems in UK as well, because again, the economy is, it's a barrel with a lot of holes, and getting, filled. Every hole is kind of very gets filled with a cork, with a high quality cork. Let's, I can describe it this way: the barrel is with holes, but they're kind of covering that hole with a cork, but it's very good quality cork. So it's like something like that, and eventually the pressure will probably push out those corks. We'll see, of course, but again, we'll see how the budget goes, and because again, that's a big issue, that's a big question. So yeah, let's see. But for now, I'm keeping an eye on this one. I'm cautiously bearish still, because we're still below this downside line. If we break it, great, I'll go higher. GBPJPY. Again, this one's interesting as well. We're approaching some key areas of resistance, but I think if I really want to get comfortable with the upside, I think I'm gonna just wait for a push above the 205.32 zone here. Yep, I think that kind of makes a little bit more sense. Whereas the pair still has a chance to correct lower here, while it could correct lower and could remain somewhere if it holds below this area right there. Let's jump into USDJPY. USDCAD. Okay, we're still, look, I'm going to be very careful and very simplistic around this. If we do remain below if we do drop below the 1.397686, then yes, I'm going to lean towards the downside. For the upside, I'm going to wait. Well, actually, this level before now maybe ideally 1.4140 for the upside, but I do understand a big area to cover. And you know what? Actually, you know what? No, I'm going to take a very concerned. I'm not in a rush anywhere. I'm going to wait for this one to give me like a decent cover here. I mean, if we clear this barrier, this 1.4140, great. I'm going to lean towards the upside. Here's the JPY. The battle of the safe havens. It seems like that, you know. So let's see if this upside line continues to hold, because you know, let's see which one's going to outpull which, because again, both are seen as safe havens. And let's see, you know, when we see bigger correction lower. Let's see which one is gonna, you know, benefit the most. USDCHF. Now I do like this one. I really do. And honestly, the Swiss franc is right now seen as the strong option. You know, probably the best safe haven. Actually, what's Finviz telling me right now on the Forex side? Which yeah, NZD and Swiss franc are the big gainers, the big winners right now. So we can see that on the chart, honestly. So yes, and look, the question for me right now, we're approaching this a bunch of these areas, support zones here, a bunch of strong support zones, and the question is, can we see a rebound back up? Well, I'm not going to rush into things, but certainly it's going to be an area to be watched. I'm not going to get very bearish if we start clearing one of these levels or something like that. No, I'm going to get more bearish if we do drop below the 0.7829 zone right there, and then we'll just take it from there. Right, ladies and gentlemen, let's jump into commodities. I think that's quite important. Gold, look at this yesterday, beautiful sell-off. Honestly, we did drift lower. The 61.8 very conveniently held here. 61.8 on the Fibonacci retracement, which I have drawn from the current all-time high to the lowest point, sorry, not the lowest point, but the low of the 28th of October. So we had done the 61.8% on the Fibonacci retracement. That's great. Now the question is actually, can we travel back above it? If we can, I'll go higher. But if we cannot, if we somehow we start falling below the 50% here on the Fibonacci retracement, ladies and gentlemen, I'm leaning towards the downside. Silver, oh, silver, look at this. Is it an all-time high? Let me just double check. 54.4680. Yep, 50. Ooh, very, very close. Again, depends on, of course, where you're looking at. You know, I'm looking at this chart here, and I mean, wow, this was, like I said, this is a spectacular move. On maybe on some platforms there it was an all-time high, but okay, I don't think that the official number has been, you know, I don't think that we did an all-time high. I think we just came very, very close. And look at this. My question, is it a double top? Of course, time will tell, but one thing for sure, that the neckline of this potential idea is somewhere around here. So if you're looking for some lower levels, I think that what I'm going to do here right now is I'm going to wait for a drop below yesterday's low. If we do drop below yesterday's low, I'm leaning first. Of course, I'm not going to rush into, you know, the downside very straight away. The same story on gold, actually. I'm going to aim for the 20-day SMA first, and the same story on here. I'm also going to aim for this highlighted zone and towards my 20-day SMA. For the upside, I would prefer to wait for a clearance of the current all-time high. That's my simplistic approach here on silver. If we can get that, great. More buyers could join in. Platinum, it retraced. Okay, we're still above this downside line. Let's see if we can rebound. If we cannot, I'm leaning towards the downside because we would drop below the downside line. Palladium, okay, we're in a somewhat of a range now, and the question is, you know, which way we're going to break out later. So for now, look, if you're a range trader, probably this can, you know, help you out if you know what you're doing. I don't like this. I would probably just wait for a breakout. Copper is stuck, so not much to say here. Oh, sugar, my favorite sugar. We are in a range. So again, range trader's paradise. But is it good for me? It will be. It will be because I'm waiting for the clearance. And the clearance through one of the sides of that range. Soybeans, yeah, continue to push higher. I I don't see why, because they made a deal with China. So eventually China is buying that. So yeah, this will continue. Most likely it could continue towards that 11.80 zone, or maybe even the psychological 12. WTI oil. Now this one's interesting. So yesterday we sold off. Sorry, on Wednesday we sold off. Thursday we did recover a little bit. Today we did recover, but we did bounce back up because apparently there was some news that there were some oil refineries hit in Russia by Ukraine drones. And that kind of, spooked the market. Everybody's like, oh my God, we're gonna drop, we're gonna have no supply and stuff like that. Come on. It was just an opportunity for the buyers to step in, but now it's fading away, and I think that this is the reality here. I mean, I said it before, and I'll say it again. I think OPEC is right in terms of that they're cutting production. They understand that there is going to be oversupply next year probably, and we're not going away from that. So we're back below the $60 mark, which is fine. And for me, because I said to be a long time ago, I'm bearish for now at least, in the medium term. And yeah, we'll see some. In general, for me, it would be really nice to see a break here below the $55 mark. That would be kind of spectacular to watch, but spectacular from the chart side. But certainly, it could bring some economic implications. So let's be careful what we wish for. Natural gas continues to rally. I think we're on track to aim for that $5 mark. So let's continue aiming for that. And finally, ladies and gentlemen, I want to finish it off with cryptos. So yesterday, I did a little report. I don't know if you're not subscribed. I did the little piece for our VIP clients. And I was kind of saying that, look, we were sitting around here. We're at around this 103 zone, something like that. So actually, let me just check my email, because I think, yes, that was... Yes, so this was the image that I sent out yesterday, and basically we were at around 103,000. There we go. Basically, yes, I said that. Look, these are my breakout points. While we remain in this area, I'm not gonna really do anything. And like I said, yeah, it worked like a charm, and we broke through the lower side here, the 99 zone, and look, my next target is around the 93 territory, 93 and a half. Or actually, no, you know what? Actually, 93 zone ish. It's plus minus, here and there, and there we go. Let's see if we can reach that, and then I'll slowly go from there. Maybe my next target will be around here, the 88 zone. I do like the 88 zone. I think it's quite doable. So let's see if we can, we can travel there. Let's see if we can reach that area. Long story short, ladies and gentlemen, for now, like I said, I'm bearish on cryptos a little bit. Bitcoin Cash here is still holding on better than Bitcoin, but we're approaching this little short-term upside line right here, which also could be violated. So just be very careful. Ripple, yes, not feeling the love, and we're pushing back down here. I'm going to get a little bit more bearish, to be honest, if we do drop below this 2.19 zone, somewhere around there. Ethereum is, yes, also, yeah, look, we were here yesterday. I said that if we do drop below the 3,423, I'm leaning towards the downside. There we go. But I'm going to even get more bearish if we do drop below the 3,058 zone right here. And then, yeah, I'm going to go for that 2,880. Basically, I'm going to go below 3,000 a little bit. Not much, but a little bit. Litecoin, yep, falling below that psychological 100 level. And the question is now, what are we going to do? What are we going to do here further? I mean, are we going to actually fall below 90? It could be. In general, I would like to see a good sell-off here. in order to pick it up later. But yeah, let's be careful for now. Dogecoin. Dogecoin is drifting lower. Everything is onto the downside. So for now, also I'm leaning towards lower levels as long as we stay below the 0.1785. Polkadot, we fell back below the psychological 3 level, and yep. What can I say? For now. For now, I am gonna continue targeting the downside, to be honest. But look, I have to be very careful and honest with you here. This is the territory I'm watching, this 2.77 zone. If we do fall below it, my next target here is the hurdle here, this 2.3435-ish zone. I think that this is a good target. But again, a clearance of this 2.77 zone is needed. So let's see what's going to happen there. Tron is interesting here as well. Very, very interesting. I would say, look, it's one of my favorite ones because it kind of actually behaves like a currency pair. It's very technical, and it's not really giving up that much as the other ones, but maybe because the other ones are kind of seen as assets, like commodities. Sorry, not assets, but commodities, like equities. So what this one actually it does look like a currency pair. Let's see. For now, look, my upside scenario is from on a break of that, actually on a break above the 0.30 zone. If we can clear that, I'll go higher. On a downside, 0.2883 is the one that I'm watching for the downside. So yeah, ladies and gentlemen, that's it. That's it for this session. It was a lengthy one, but I had a lot to share. I hope you found it useful. Ladies and gentlemen, thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. Please don't forget to like and subscribe. And as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you on Monday, ladies and gentlemen, for new market action. Let's see how this Friday is gonna go, and please promise me one thing: you're gonna be very, very careful today. Ladies and gentlemen, have a nice day and have a nice weekend as well. Bye for now.